So 2 days ago, OPEC Plus announced it was going to expedite output increases, and boom, oil fell to a 4-year low. On Monday, Brent crude fell to less than $60 per barrel. Yesterday, it bounced back to $62 per barrel. Today, it's trading just above the $62 mark. If global oil producers up their output, oil prices will definitely fall. For independent oil producers in Nigeria as well as across Africa, how will this augur? So welcome to Economy and Market on Business Day TV, where we give you a comprehensive breakdown of market and economic activities. I'm your host, David Olujimi. In Nigeria, when a potential crash in oil prices is in the works, general attention shifts to government finances and a slide in the value of the Naira. Considering oil exports are still a major source of FX for hedging against currency instability, this is not far-fetched. However, beyond the fiscal space, oil drives a lot of activity in the economic and financial space. There's a break-even point beyond which oil prices should not go, or E&Ps are just going to languish in losses. Not just the oil sector, the banking sector is also affected, as highlighted during Access Holdings investor call. During the investor call, their chief risk officer, he made a statement. He disclosed that the bank has been doing stress testing for oil at particular levels. He noted that the break-even prices for oil projects in their portfolio ranges between $16 to $30 per barrel, and at the high end, $40 per barrel. He noted that they had stress-tested scenarios as low as $20 and insists that they can withstand that shock. But the fact is that they are preparing, the fact that they are preparing for it tells you something. The risk is real and resilience is part of the business model. Essentially, what does this mean for Nigeria? For Nigeria oil players, basically the way out is in adaptability. Probably they will have to go with leaner operations. They may have to diversify their investments. They will have to lean more to local content and sometimes better financial discipline. Oil at $60 per barrel is a warning shot. The question is, are we ready to pivot before the storm becomes a crisis? In Saudi Arabia yesterday, the country noted that it signaled a willingness to live with below $60 per barrel oil prices. This is a fact. It's a tacit admission to the fact that a sharper crash cannot be ruled out. In the US, the Energy Administration information warned about the risk of oversupply of oil and a possible crash in the prices of oil. In the same US, oil producers who drill shale oil have begun to cut down on their activity because for them, breaking even means that oil prices must stay between $60 and $71 per barrel, suggesting that if it goes below, there could be significant cutbacks and the downturns are not going to be friendly. So let's bring it a little bit home. Let's come back to Nigeria. Let's come back to the African scene. With oil prices hovering around $60 per barrel, Nigerian oil companies are staring down a familiar but dangerous slope. This is not about dollar inflow or budget deficit. It's existential threats for local E&Ps. Many Nigerian oil producers, especially the independents, now I'm talking about the Western E&P, Aradel, I'm talking about Seplat, I'm talking about Ito and companies like that. They are high cost operators. Basically, they operate assets that are old. For example, the recent assets that Seplat acquired from Mobil, some of those assets have been in operation since the 1960s. There's security issues, there's crude theft, infrastructure gaps. All of these things drive up operating costs for these oil companies. And that's what we've come to discuss on the show. On the show this morning, we have NJ Ayuk, the executive chairman of the African Energy Chamber. NJ Ayuk is a lawyer and the founder of CLG, which was formerly known as the Centurion Law Group. He advocates for energy access, investment, and local empowerment. He's a best-selling author and speaker, and he advises governments and companies on energy law and policy. Welcome to the show, NJ.
Thank you for having me. It's an honor.
Yeah, good morning. NJ is reporting from Sandton in Johannesburg. So let's get started right away. Can Nigerian companies, do you feel like they can survive at $60 per barrel oil when oil is trading at $60 per barrel? Is there what's the chance of survival?
They would survive at $60 per barrel, but they would do even better when oil prices are somewhere around $70 or $80. We have to be very careful with an industry that is very volatile, and when we find these price crashes, then it does affect Nigerian producers who in some cases have acquired assets from big multinational, but they are doing something even special that the multinational were not doing. Nigerian producers are cost effective, cost sensitive, and they're more effective in how they produce. They produce at a lower price point, but Saudi Arabia can survive with something low because they produce oil at $7 per barrel. The US 14, Russia 21. In Africa, we're somewhere between $28 to $36 per barrel when it comes to production. That is a problem. And then when you look at other costs associated with it, it becomes even more difficult. So, of course, when you go into OPEC, African nations in OPEC, which have been privileged to be in that OPEC cloakroom, really dynamite place to be. We are always advocating for cuts because we, first of all, want to avoid the supply gluts, but we want to make sure that African companies can produce, because if it's not just about them surviving, it's also about them investing into new fields, in new infrastructure. That is what is really going to drive our build, drill, baby, drill narrative, because we want these Nigerian companies to have extra cash to be able to drill exploration wells.
Okay. So now you made a statement about the cost of exploring oil in Russia. You used America. Now, what's the break-even point for some of the oil majors versus some of the independent, smaller oil companies in Nigeria? So some of the oil majors, I'm talking about the Shell, the Chevron, and the ExxonMobil, Ayuk, what have you. What do you know the break-even point for this different set of companies?
Depends where you operate. Depends if you operate in deep water or you operate onshore or shallow. But we are still hovering. Our cost point is still so high. We're hovering between $36 to $40 per barrel. But then that gets even up when we don't deal with issues like crude oil theft, insecurity, and that becomes, and some of the mismanagement we've seen with corruption, then it increases our cost per barrel, and it makes it difficult. So we need to be more efficient. We need to deal with our above ground risk issues to ensure that not just the Exxons and the Chevrons will survive in Nigeria, but also the Aradale and the ITOs and the Sahara and the Wandos to also survive. Renaissance and the Chapels, they need to be able to survive in this market. But when we deal with above ground risk, we bring the cost of operating down. It's not just the companies having to do it. We need to look at the environment that we're operating in. Crude oil theft, blowing up pipelines, corruption, mismanagement is costly, and it's going to drain cash out of these entrepreneurs from investing into new projects. So we need to bring our costs down.
So you made a statement now that it's kind of leading to my next question. My next question was, can local firms slash their costs without cutting output? But you've talked about the structural issues that are very prevalent in the sector, talking about the crude oil theft, the vandalism, all of these issues. What is a projected, let's look at it from a short-term perspective, what do you think is a way out? Can these local firms slash their cost without having to cut their output?
Yes, they can, and they're already doing it. Let me give you an example. Okay. The fields that Owando and Seplat took over from Exxon and from ENI, you know what's funny? They're operating those fields better, in a more cost-effective way. They produce more oil, and they are doing that in world-class fashion. Majority local Nigerian employees working for these corporations, Owando and Seplat, majority local Nigerians really dealing with HSE and producing in the world-class fashion. So there is talent there. Of course, they still have to bring in technologies from Western nations on what you don't have locally. So you have to look at those cost variations and see how it can help. But what you're dealing with in Nigeria, and most people must understand, is that you have an oil industry being run by some of the most seasoned, world-class people in the world. And they're Nigerians. They've worked for Shell, they've worked for Exxon, for Chevron, for Total Energies, and they bring this world-class skill set, and they are running all their own business. But the key essence in them being able to do what we want them to do, drill baby drill, improve production, look at exploration, bring costs down, pay more taxes to government. It comes with us dealing with above ground race issues. We need to look at the policy regulatory impasse. For example, right now we're talking about oil at $60. Oil was $70, $80, but a lot of these companies had projects that they will have to sanction, but it got stuck in the hand of NUPRC and many government bureaucrats that didn't push. It shouldn't take too long to approve a project and the time you need to build that project. So approve deals, get incentivized companies to move, and they would, I bet you, they would move fast. Saudi Arabia can say, listen, we can live with below $60. They're producing 12 million barrels. Nigeria's potential is 4 million barrels a day or even 5. And gas, oh my God, you could do so much with gas in Nigeria. Sanction this project, let us unleash the potential of these entrepreneurs and let them start a new sense of Nigerian energy dominance, and it would take that country to the next level. We need bureaucrats to do their job so that these great technical entrepreneurs can come in and close the gap and set us to a path of energy dominance in Nigeria.
Okay. I love your optimism, especially about Africa. It's interesting. But now you've spoken about the NUPRC and some of the government bureaucratic bottlenecks, basically. Now, apart from the bottlenecks from the side of the bureaucrats, how severe are funding challenges for new exploration projects? How severe, basically, what's the level of severity when it comes to people not being able to access funding for new exploration?
It is tough. You know, I'm not gonna miss words about this. To get money for an exploration well, it's tough. That's why you need to make more money if you're producing, get some extra cash, don't buy a private jet, take that money and invest in exploration, because the banks, because of issues around climate change that Nigeria didn't cost it, Africa didn't cost it. You have less than 3% greenhouse gas emissions. But developed nations that have benefited from fossil fuels, reduced debt, driven human flourishing, now they're saying that that banking financial institutions should not fund fossil fuels or oil and gas exploration projects. But the hypocrisy around it, though, that still affects Nigerian entrepreneurs is that natural gas is green in Europe, so they can finance it, but in Africa it's not green, so you can't finance it. So Nigerian businesses are in a very tight position where they have to not just, they can be promised debt, but they have to raise real equity to be able to drill those exploration wells, whether shallow or onshore or deep water. And exploration is a risky business. You see between 15 to 20% success rate when you go into this exploration well. So it is tough. People think the African Energy Bank is going to be a solution. I hope it can really be a solution. It can really help, but we have to be able to raise that capital because, you know, we have $2.4 trillion of private capital in Africa. We're not tapping into that. We have almost $475 billion of pension funds. We go to our pension funds and say, don't put that money in Europe, put it right here in Africa, fund these projects. And it's not just exploration, but also energy infrastructure projects. I was very happy to see what Lake Oil did with this LPG, Lake Oil and Green Energy deal with the LPG plant out there in Nigeria. You need to have energy infrastructure projects set up that meets demand when it comes from upstream, midstream, downstream. That's what we need to be gunning for. And I think we can do that right here in Africa and in Nigeria, but we need to put our heads together and drive that.
Okay, thank you so much. One question I want to ask is about crude oil loans. Nigeria has this problem. NNPC Limited has this thing where there were a lot of forward sales of crude oil for USD basically. There's been a lot of forward sales of Nigerian crude. As how is this going to augur now, considering the fact that oil prices are dipping and may dip for most of 2025? Is it going to be a liability for the NNPC and for Nigeria in itself?
That's a tough question. You have to look at the economics of it. Sometimes crude oil backed loans are not always bad as it's said, but we also have to ensure that it is transparent, is done well. But we also have to look at sometimes how we benchmark our crude oil ahead of shocks when you find things like this that we have today. We have to be very careful. You have a state entity that basically funds a lot of government projects. When you have politicians promise everything to people, citizens are demanding roads, they're demanding bridges, they're demanding railways, they're demanding schools and healthcare. Government has two options. You get some big cash in and drive up these infrastructure projects and a cost of living to try to bring cost of living down. You need to find the dollars, or do you go to the same poor people and tax the hell out of them to raise money? So the government is always faced with this conundrum on how it handles that. But yes, of course, sometimes you need some kind of crude oil backed loans in being able to get the dollars to shore up your reserves and do projects. But it cannot be the norm of the day. It will be very good when we return to the day where we can trade on spot and we can do that well. And I think when we start trading on spot, it would really help. But you have to look at the country's peculiarities and look at the crisis that they find themselves in and trying to get economy turned around to get the country moving again. Because when you look at inflation and cost of living is getting high, you have to find solutions for that. And it cannot just be NNPC carrying out the entire nation's problem. And I say that with a lot of humility, being a non-Nigerian, but being an avid fan of that country. So I do believe that the Nigerian peculiarities are very, very different from other countries. Nigeria is spatial. There's some things that happen only in Nigeria. So you have to always look at it from a Nigerian context.
Okay, thank you so much. As a Nigerian, I think I'm proud of the way I'm proud of you being a fan of Nigeria. Well,
give me my passport. I need it. Just give me my passport.
Oh my God.
Tell me when to pick it up.
We'll pass this information across to the people at the Ministry of Interior. So do you have any information of how IOCs are reacting to this potential drop in oil prices? Because drop in oil prices basically implies that their margins are definitely going to go lower. Do you have how are IOCs reacting to this potential drop?
I think the oil companies are very, very well astute. They're looking at the industry differently. They understand that this with price shocks. They're also looking at to see how this is going to play out. I mean, you look between May, June, July, you might see a 1 million barrel in there, but we have to really pay attention to a supply glut, and it's a wait and see moment for now. But I do think for Africa, we are very optimistic with the projects going across Africa. You're going to see drilling in deep water Nigeria. You're going to see high impact wells in places like Namibia. Field development projects are moving in Angola. Total Energies is going back with its $20 billion big project out there in Mozambique. Exxon is moving on the Rovuma LNG. A lot is going to happen. Where you need to keep a sense is the companies that are lean, mean, cash strapped, the independents, because they are going to be the new drivers of this industry for the future. So these independents, they look at every nickel and dime. Trying to get money from an independent, they will squeeze you. I'm always a guy who is looking for money. The independents are tough, but you know what? They are going to really look at this price and stick a weight. But then this is where we come in. We show up our fiscals. We make ourselves attractive. We make ourselves that even at a low price point, we are still attractive, that people can bet on us for the future. Because you know what? If you drill today and you develop gas project, gas is kind of like a Swiss knife. You can use it for a lot of things: urea, ammonia, NPK, fertilizer, power, and you will still be able to drive that within this continent. 1.5 million people that don't have electricity. You would be able, 1.5 billion people with 600 million that don't have electricity, and 900 without clean cooking. you'll be able to find that markets and still make your business profitable. That's why I advocate for energy infrastructure. That's why we look at intra-Africa energy trade. You saw AfriEx put out $3 billion to drive intra-Africa energy trade. We need to be encouraging that, because when it's near, it's faster. We build refineries, we would move this continent, and these independents will be able to invest, and Nigerian independents are going to take the lead, not just in Nigeria, but across Africa.
Finally, I have a question about mergers between oil independents. So some people, maybe like me, I'm not supposed to have a personal opinion about this, but I feel like some independents need to come together. We need to see a consolidation of independence. What are your take on it? Do you think stuff like this, where oil pricing may start to be a challenge, especially for the small time players, do you think it may lead, we may start to see moves like that, mergers and acquisition in the oil, especially in the upstream oil industry in Africa or in Nigeria especially? Are you looking forward to events like that?
I am, but free markets are still the best path to prosperity. You already seen independence coming together. Where else than Nigeria could you see? Look at what happened with Renaissance. You have about 4 or 5 companies, Walter Smith, Petrolink, and all these guys included, and they did it. So it's not something new. This is what always happens. It's mergers and acquisitions. We look, you divide risk. Everybody don't have to be the leader, and this is what you see as a great story, that our industry is leading the continent. We're showing that companies that competed against each other, collaborated with each other, and they're showing that that would work. We need to translate that into our public life and our business life. You're going to see a lot of that, because a lot of independents, not just African, but also European independents, are going to consolidate, because they would need to have the cash reserve to take on some of the big ticket projects that you see across Africa. And that is going to happen because financing is going to continue being a problem. We have people shouting in Europe about climate change and all of that. I mean, it's not our problem. It's called global warming, not Africa warming.
Yes.
So we shouldn't have to be the ones that bear the brunt. But mergers, acquisitions is going to be part of this industry. And you know what? It is the way the industry would go, but I don't think the oil prices are going to lead to that. I think it's going to be driven by projects, company culture, visions, where they want to go, and the kind of strategic investments that they want to do. Pay attention to that, and I think that is what is going to really drive, because you know what, it's a volatile market. It has its ups and downs, but boy, I tell you, where else would you want to be than watching the oil industry? It is the greatest industry in the world, and nothing better than watching what is going on in the African scene. Africa is going to shock the world with this oil industry, with what you will see in the next few years. So finally, we are going to dominate.
One last question, NJ. So the question just came to me now. Do you think we need more Dangote size refineries? Do you think we need more of it in Africa? Is this something you're looking forward to? Do you think there are other billionaires? Dangote is not the only dollar billionaire in the continent. We have some in South Africa. We have in Egypt. We have Nassif Sawiris in Egypt. We also have Nigerian billionaires. Do you think that it's something they should be looking to doing? Industrialization of such large scale?
Yes, we do. The answer is yes, we do. We need more refineries.
Okay. I lost your voice. I lost you for a minute there. Can you hear me? NJ, can you hear me? We lost you.
Can you hear me?
Okay. Sorry, you were saying something. Now I can hear you. I can hear you clearly.
I said, yes, we do need more refineries in Africa. We live in a continent where we are unable to get clean cooking fuels like LPG to 900 million Africans that don't have to cut biomass every day. That is an energy crisis that we have to deal with. Our refined products are not going across Africa very well. Danfoot is even sending refined products right now outside Africa because we've not opened those markets. But the market is there. We just don't have the refineries to meet African demand. And African demand is going to grow up every day. So we need to have strategies. We're still importing refined products coming from Europe, from the Middle East, from Russia, from America
the African continent. I think African business, African entrepreneurs can really seize that opportunity and drive that market to ensure that we're doing well and everyday Africans are getting that. That's when we take care of our energy security, that builds a pathway towards our development. And we need to go with that and go with that very hard. And that's what we will do. And I want to encourage, Afro-Exim is doing a lot supporting that. Western financial institutions have been really investing, but then Cody did something special. It wasn't just refining for refined product, but also pet camps, petrochemicals, and that is also going to shape things where we're going to really shore up our agricultural basis so we can feed our people. Don't you think it's bad that we're receiving food from Ukraine, a country at war at this time, with vast land in Africa and so much gas that we could really turn that around and really drive up agriculture and feed our people and create more opportunity for our young people so they don't have to cross the Mediterranean to go into Europe? We need to be looking at that big time and looking at things differently. So yes, African entrepreneurs need to step up.
Thank you so much. Thank you so much, NJ. It was a very lovely, exciting, insightful conversation with you. We love to have you again on Business Day TV another time in the future. Thank you so much.
Any time, on condition you prepare my passport ready.
All right. I'll let them know at the passport office. Okay, thank you so much for joining us on Business Day TV, Economy and Markets. It's been a lovely conversation. On Friday, we're going to be talking about African diaspora investments, African diaspora and their investments in the continent. Have a lovely morning. Good afternoon.